All right, boys and girls, it's about that time of day again here, folks. Welcome back. Welcome back. The 27th of May, 2014. My name is Joseph James. Thank you so much for stopping in and taking a peek at our nightly newsletter here. First day back after a long weekend. Hope you guys had a great Memorial Day weekend. What a fantastic weekend it was here in the U.S. I'll tell you, this is the time when you start to smell the barbecue grill, right? The boats get fired up. Everybody excited about summertime. But we got some money to make today. A little bit of a sloppy day today in the markets. Things get back to normal after a long weekend. Kind of felt like things needed to get a little bit back on track this morning. Had some big news here that came out overnight. Now, what's the schedule for today? We're going to first talk about what happened today. Gold drops 2%. Crussell. It's a Monday or a Tuesday, right? Sorry about that. Gold drops 2%. Russell pushes higher. We had some of the E-minis making new all-time highs today. And, of course, we also had crude oil trading sideways still. So we had some markets that were moving. We had some markets that were sitting sideways. We'll take a look at what happened today. Then we'll grab a look at the news for tomorrow. We get a bunch of important news here happening overnight. Not a lot on the schedule for tomorrow in the U.S. We'll grab a look at tomorrow's news so you're ready no matter what time zone you're in. And then you know what we always finish up with? We're going to roll up our sleeves, grab a look at some charts, and get ready for trading opportunities tomorrow, which, of course, will be Wednesday. So if you hear me referring to it as a Monday a few times tonight, you know why, right? Monday was a holiday. Here we are on Tuesday, and so, of course, I've caught myself calling today a Monday all day today, and I'm sure you have as well. All righty? Before we get started, I want to remind you guys to get over to sidewaysmarkets.com. If you're not watching this video right now on our blog, make sure if you're on our YouTube page, there's a link right below the video, and that will take you over to our blog. Why should you be at the blog? Well, because right below the video hosted on our blog is going to be a link for you to download all of today's charts and all of our commentary. Now, why do I take the time out of my day to do that? I do this so that you can stop the video, right? So pause the video for me. And then click on this link below the video. That will take you over to slideshare.net. And then guess what? You can download all of these charts, and you can have them for tomorrow, or you can open them up and have them next to the video tonight as I go through the levels. You can put them on your iPad, put them on your smartphone, whatever you want to use them. So make sure you download a copy of today's newsletter charts. That way you've got them for tomorrow. And I have a bunch of them tonight for you because a lot of things got shaken up over the past 3 or 4 days. So in addition to downloading all of the material, I also encourage you guys, take advantage of the free pass. Every afternoon, we open up our trade room for guests to come out in my trade room and get an example of how we use these materials to profit from. I have a special invitation for you as a guest, as a trial member, to come out and experience what it feels like to trade next to a professional. I've been doing this almost 14 years now. I've been teaching almost 11 years now. And I'm pretty confident you're going to see something you've never seen before. So take me up on my free pass offer. And then last but not least, if you want to always get this newsletter sent to your inbox, give me your name and your email address on the left-hand side there. And then that way, I'm going to send you a confirmation email. Check your email, and that way you'll get a copy of the newsletter in your email box every night around 8 p.m. Eastern Time. All right? So filled with important stuff here on the blog. Make sure you get over to sidewaysmarkets.com and check out all the wealth of information. We just put a brand new section on here called Day Trading Price Patterns. Check it out. Now, let's get on to business here. What happened today? Gold tumbles 2%. Now, if you remember, this time last week, we were right in the thick of things here on gold. Remember this chart from last week? This is what it looked like last week, right? We had this range-bound market. And over the past 3 weeks, we have been making a killing on this thing, just buying those lows and selling those highs. Now, depending on who you ask, and it usually happens to be which news station you use these days, but depending on who you ask, they're going to tell you it was the Ukraine election. No, wait a second, it was China and Vietnam. No, wait a second, it was Obama's new puppy at the White House. No, wait a second, guys, who cares? All right, I'm telling you right now, the reason why gold dropped 2% was not just because of a Ukrainian election. All right, it wasn't because of a boat that rammed into a Taiwanese fishing vessel, right? It wasn't the reason. All right, I'm telling you that right now. So gold tumbles here. Hello, this is supposed to happen. I've been saying this for a few weeks now, right? Once we get down to the nitty gritty, once we get down to the end of this, we had to have this happen. All right, so while everybody out there is trying to blame this on a Ukraine election and somebody sneezed the wrong way and whoops-a-daisy, it drops, come on, guys. Don't believe what you see when there's advertising, all right? Bloomberg, CNN, CNBC, guys, they're selling advertising. They can't just tell you, I don't know why it dropped, right? Because that's what they should be saying. That's what I'm going to say. I have no idea why it dropped. Do I care? Absolutely not. I don't care why it dropped. Now the only thing I care about is how do I make money on it going lower, all right? That's the big thing. So back off the ledge, everybody. I got so many emails and questions today. Hey, why did it fall? Where's it going next? Why did it fall? Guys, who cares why it fell? All we care about right now is what we see on the chart, all right? Now, a real trader says, forget about why. I want to know when and I want to know where, because that's what I can make money off of, right? The only people who care about why are non-traders, right? The people who don't trade. And as far as I'm concerned, I don't need to worry about them, do I? So here we have a big gap down overnight. Now, unless you're under a rock today, maybe you didn't hear about this, but a big gap down overnight, right? Yeah, there's some shenanigans in the ocean, right, where Chinese military boats surrounded a Vietnam fishing vessel. It was retribution from 2 weeks ago, blah, 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 blah. Who cares, right? Ukrainian election, which I still have no idea what the hell that even ended up doing, right? It doesn't matter. So we gap down, big gap down, huge gap down. This is expected. We've been narrow over the past few weeks. So that gap, if you guys study Japanese candlestick reading, right, go read that book by Steve Nissen, Beyond Candlesticks. They talk about gaps being windows and windows like be filled. So don't be surprised if we end up right back where we came from here later on this week and fill in that gap. Bottom line is, though, in the U.S. session, we only had about 150 ticks of range. Now, I called it wide because of this huge gap down. So I'm going to call it wide. All right, there was well over 300 ticks between Friday's close, right, and Tuesday's close. So we had a pretty big move down. That's a pretty wide range. Remember, wide ranges oftentimes result in narrow ranges the following day. Now, look at the technical clues that we're getting here. We open with a gap down. I can tell you one thing it's not. That's not bullish, all right? It's definitely bearish. But here's where we get a little bit foggy. Where we close at the lows. Now, right off the bat, we open lower, we close lower, right? Slam dunk, right? I'm getting short. Pay me now. Not so fast. The real clue here is the volume. As you can see here, the volume was up near the highs. Now, what does that mean? Well, it means the most amount of volume, and you can see it was close. We had a volume spike here and a volume spike here. So I've got volume at 1268 and I've got volume at 1277. Now, do we have any market profile theorists here in the group? Because if we do, that now becomes my range. I expect for prices to go back and forth here between what they call the high volume nodes, right? Or as I call them in my trade room, I just simply don't like the word node. I don't like the way it sounds. I don't like to use it. Kind of confusing. So I use the term volume spike. So where we see the volume spikes, that now is where we expect to see price spending most of its time here. What this tells me is that if we don't go lower, we can pretty much expect to get back to that 1277 tomorrow. That's if we don't go lower. Right now, on this chart, I just want to show you what happened today. Big gap down, open lower, close lower, but then record skips. All of a sudden, we see volume. Volume was not lower. Although you can see, yeah, maybe it was close, right? But again, we're looking for the high volume node here, the high volume watermark at 1277. What this tells me is, this tells me if we, for some reason, do not continue to go lower, and this becomes a range-bound market, wink, wink, nod, nod, hint, hint, for tomorrow, we know a reversal would bring us back to the high volume. Now, the hardest part about looking at a chart like this is that as I look lower, there's nothing down here, right? It's just a wide open space. So now what I have to do is I need to, as a technical trader, as somebody who uses rules, proper entry patterns, and risk management, I'm not a fundamental trader at all, right? I haven't been on this planet long enough to be a fundamental trader. I'm only in my early 30s, right? I haven't seen enough of this world yet to be a fundamental trader, if you ask for my opinion. So I use patterns. I use rules. I'm a rule-based trader, which allows me, as a relatively young adult, to be able to trade just like somebody who had 50 years experience, right? It's the beauty of being a rule-based trader. That's why I tell all my brand new students, you don't need a lot of experience being a trader. What you do need is a good attitude, a consistent schedule, a couple $1,000 in your account, right? And the determination to work hard with me and learn these things. And you can do this without a lot of experience. So what we know right now is big gap down on gold, big range, and we know that big drops often equal big pops. We know that big ranges today oftentimes equal small ranges tomorrow. But I'm telling you guys, if we make a run up here, you know we're going to 1277, and then don't forget about this gap. Don't forget about that gap, guys. You got 1279 and then 1286. So the most important levels on this chart right now, 1264.3, 1277, 1279, and 1286. Everything else is pretty much a waste of time right now. All right? Those are the most important levels I have right now. We're clearly bearish, but how far will we continue? Well, I'm glad you asked, because in just a few moments, I'm going to show you my plan for trading gold on Wednesday. Stick around. Now, we go forward here to the mighty mini Russell. Now, while gold is dropping, a natural correlation, a negative correlation, would be to see the E-minis or the equity markets rise. Now, the Russell's the oddball of the group. The S&P back above, what did we get, above 1900 today? So we're at all-time highs on the S&P right now. Now, I'm going to show you why I think we could be back at all-time highs before the end of the first week of June. But I'm going to make you hold on for that. So hold on tight. At the end of the newsletter, I'm going to show you guys my charts for the Russell for tomorrow. And I have reason to believe that towards the end of this month here, we might just be right back at new all-time highs right along with the S&P. Clearly here, again, a bullish report. You can see here, we closed on Friday at the high. We opened on Tuesday. See, I almost said Monday. We opened on Tuesday above the high, right? Gap up. So now, of course, this becomes an unfilled gap. All right? Gaps like to be filled. Gaps have a vacuum, kind of process to them. Whereas if we end up going higher here and then we gap up, what will happen is that gap will be filled very quickly if we do go back lower. So it will fill very, very fast. I mean, we're talking it will sell off like a banshee going lower. It'll fill that gap real fast. So just be aware those gaps exist, all right, because they are very important if you know what you're doing with them. 143 ticks of range, relatively typical today. Really, for the most part today, though, it opened up higher and just grinded higher. So we were focused on buying the whole morning, and then we had some profit taking, and you can see all the volume piled up here right around 1140. So typical range, under 200 ticks is pretty much typical as far as I'm concerned. We opened higher. We closed higher. The volume at the highs. All right, and of course our 2-day was higher. The most important levels I see on this chart here for this evening: 43.6, 39.9, 31.5, and we'll say 25.2. It could also be 24, right? Those will be the most important levels on my chart. And then, of course, basically, if we end up collapsing here, we'll expect that to go right back into that range from last week because it will fill that gap. I don't think that's in store for tomorrow, though. And I'm going to show you guys a reason why I say that in just a few moments. So relatively narrow, relatively typical range today, but ain't nothing but the bulls looking to be in charge right now on the mighty mini Russell. So that's what happened today on the Russell. Moving forward here, finally here down to the black gold. Now the gold market, the crude market here on Tuesday morning. A very narrow range. I'll tell you, this crude market still continues to be a range-bound market. And like I've been saying the past few weeks, if you're trading the crude oil 2014 market the way that you traded the crude oil 2013, 2012, and 2011 market, well, you're having just a real frustrating year, aren't you? If you're looking for big trends on crude right now, you're in the wrong market, all right? Go back to the Russell. Go back to the Dow. Go back to the equity markets. So here we have crude doing what it does best right now, going sideways. Now, I could sit here and say, oh, blah, 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 right, they're out to get me, they're making the market go sideways, I can't make any money. Guys, a real trader does not complain about things we can't control. If you're complaining about things you can't control, you're in the wrong business. Because wake up, I can't control a single thing about these markets. All I control is, well, like we always say, right? Every sailor has the same wind. What makes an excellent sailor? No, it's not great lifeboats. No, it's not. What makes an excellent sailor is how we use the sail. We can't control the wind. What we can do is control the sail. So we have to adapt to this market right now, and that's exactly what we did today. Range-bound market on crude, buying lows, selling highs. That was the strategy from the get-go today because we had a very easy set of clues today. While the gold was gapping down and the equities were gapping up, we opened up right in the middle of the range from last week. So you can see here, 80 ticks a range, relatively narrow. Guys, we have an average daily range of less than 100 ticks right now on crude. A year ago, we were at 225. So you can just imagine how many people are getting their you-know-what's taken off right now. They're going broke because they're trying to trade crude like it was the same it was last year. It's not, okay? So we have to adapt to it, which means now this 80, 90 tick range, bring it on, baby. Bring it on. If we open up in the middle of the range, we know we're looking range bound. We're buying lows. We're selling highs. And you can see here on Crude Boy, narrow range today, opened right in the middle, closed right in the middle, right, of its range, opened up in the middle of Friday's range, closed right in the middle of today's range. So neutral, volume right in the middle, right around 104. So this basically tells me right now that ever since we had that big run on Wednesday, Thursday last week, remember that last week? What was it? No, it was Tuesday, Wednesday last week. We made that killing on the way up, right, last Tuesday, Wednesday on crude. And then ever since then, it's just been sitting here, right? It's jumped up, and then now it's just sitting here sideways, undoubtedly balanced right at that 104. So I'm not going to argue with it. I can't change it. What I can do right now, though, is use that 104 area as my target. As we go higher, I'm selling highs. As we go lower, I'm buying lows. That's all I can do right now, guys. Most important numbers on this chart. Prior week high, going from top to bottom here. Prior week high, 104.50. High of day, 104.37. 104.08. I'm going to say 104 even, right? Big round number. 103.57. And then you might remember this, but there was a gap that was unfilled last week at 103. So those are our important numbers here. Also, remember, too, is as I zoom out on this, you may have forgotten about this, but as I zoom out on this, we have a very tasty bullish channel here. Let me get this chart up here for you real quick. right? We got a nice big bull channel here. So as we pull back, as you can see, as we pull back here, we're going to get a little bit of support there at 103 and start moving higher. Now, you might be wondering, where are we going in the future? Well, I've got some reason to believe here that 106 could be in our future in the next few weeks. And hold on tight for that, because I'm going to grab my anchor charts and we're going to look and see what this has in store for us for later on this week, right? We get some good projections going up higher for you guys for crude, all right? So very, very balanced right now. We've been balanced ever since Thursday morning after that big run up on Tuesday, Wednesday last week. Now that we know what happened today, let's grab a look at the news worksheet here for tomorrow. News for Wednesday, right? Monday was a holiday. Hope everyone had a great Memorial Day weekend. Hope you guys were safe and rested up here for a busy week. This morning we had durable goods. Everything though was moving pretty well before that news came out this morning. How about tomorrow though? Now you'll notice here, if I look down at tonight, we have no major news coming out from China, no major news from Australia, nothing here before midnight Eastern time tonight. But head on back up top here and you'll see here we got some Red Star news on the calendar from the Swissy, right? We got 1:45 a.m. We got the GDP coming out of Switzerland. That's going to be a mover if you're trading Forex, right? Any of those Swiss-based pairs. I've got just minor news here. 2:45, 3:50. Big news at 5 o'clock. So if you're a Euro trader, you get a bunch of just kind of medium, kind of middle-of-the-road news there. If you're trading London tomorrow at 3 o'clock in the morning, 3 to 7 tomorrow, you've got some good opportunities here starting at 5 a.m. So 5 a.m. tomorrow, I've got the economic sentiment from the EU. And you'll notice here we get a little bit more out of Great Britain at 6 o'clock. But really, for the most part, though, it's 1:45 a.m. from the Swissy, which I don't expect to be a big mover. I think the big report, though, tomorrow will be at 5 a.m. And we've got no major news tomorrow in the U.S. session. Now, no major news. The first thing you should be thinking about now is range-bound markets and adjusting your strategy tomorrow to capitalize on a range-bound market. If you're a member of mine, tomorrow morning at 8 a.m., we're going to open up the trade room and we're going to get together, we're going to put together a plan to define the market personality and figure out what our plan will be. So come out and join me tomorrow, 8 a.m. Eastern time, and we'll put together a plan to capitalize on what we're seeing at that time. So only one really major news report, and that's coming out of the EU tomorrow morning at 5 a.m. All right, now, this big gap down on gold, right? This big gap down on gold. Where are we going? What's the story here for gold? Well, the first thing I did is I zoomed all the way out, I slowed down the anchor chart, and I grabbed a copy of a slightly different time frame here on the gold. And I did that just because I wanted you to see kind of where we're going here right now. The most important levels I see on gold right now, going from bottom to top, are going to be this major swing low, 1182 area down to 1180. I've got major support at 1227 to 1206. And then I've got these levels over here at 1262.8, 1252.7, and 1235.5. Now, you may have thought that this fall today on gold was a free fall, but it wasn't. It actually went right to a predefined support level at 1262.8. So right now, off the bat, we know we have pushed lower here. It's something we were waiting on for a few weeks, if you remember. I mean, we were waiting on this to push outside of this range, and my gut told me it was going lower last week. Don't take my word for it, of course. Go back and watch last week's newsletter, and you'll see I had expected gold to drop here. How far it drops and when it dropped, that was the difficult part. So as we go lower here, I've got some significant support levels waiting for me as we go lower, which I'm going to use here as profit targets. But here's the plan, though. I don't want to be selling right now. If you're trying to sell right now on gold, well, guys, you're borderline crazy because you're selling at a discounted price. Now, obviously, if you knew for a fact it was going to keep on going lower. If you had that crystal ball all shined up and working like a champ, obviously you could just sell right now. But for everybody out there who does not have that crystal ball, right, as in myself, I know sometimes it feels like I do, but I don't have a crystal ball. So in order to be safe, in order to protect my capital, I want to buy at a discount and sell at a premium. So we're going lower right now, which means I'm looking to sell here as price comes off these lows. I'm going to sell 1289.5, 1295, 1304.5, and 1309.8. Those are going to be where the major resistance levels are, and that's where I'm going to be looking for shorts as we go lower on gold. Now, how about something a little more realistic for tomorrow? Okay, this is the slower of the anchors. Now we go down to the faster of the anchors. All right, I'll put all these charts up on the website tonight for you so you guys can use them. Here we go now. Now I've got a new lower low. I'm below all the key moving averages. I'm not going to sell at this discounted price, right? Would you sell a car? Would you sell your gold? Would you sell your home if prices were at all-time lows or decade lows or yearly lows? Of course not, right? Nobody would. So when do I want to sell? I want to sell my car. I want to sell my home. I want to sell my pocket full of gold coins. When? When the prices are at their highest. So what am I going to do? I'm going to wait for price to go back up a little bit. Now, I know, it might keep dropping. You're right, it might, right? Shoulda, coulda, woulda, wish I would. Yeah, doesn't matter. All I can plan for is the worst. So I'm going to be patient. I'm going to wait for price to come back up here, and I'm looking to sell short at 1282.9, 1283.7, 1288.5, 95.3, and 99.4. Alrighty? So now you know where we're looking to sell short. And I know this is tough right now because this big drop here, it makes your emotions fire on all cylinders. But remember, if I start selling right here and then all of a sudden people start taking profit, I'm going to be in a world of pain as this price goes higher. And just about when I get out of that painful situation, right, just when I wave the white flag saying, mercy, 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 I can't take it anymore, you know what's going to happen, right? Guys like me are going to sell short up here, and then you're going to be sitting with a big loss. Meanwhile, I will have sold from you buying. So don't sell the lows. Rather than waiting to sell the lows, right, wait for price to retrace off those lows and then jump into it as it goes lower afterwards. All right? If you try selling right now, you might get lucky. But remember, as a day trader, we have to program ourselves here now so that we think worst case scenario. And worst case scenario is on gold is that it jumps up, right, and retraces before it goes lower again. All right? I can't predict what the next 12 hours are going to bring. What I can do, though, is I can put together a plan for me. And my plan says I'm selling no earlier than 82.9 here on the gold. Now, had a bunch of questions come in over the weekend about the Russell. Where's the Russell going? What do you think about the Russell? Now, if you remember, we had speculated a few weeks ago that we might be back to that 73.7. But it looks like whoever is down here propping up this 200 moving average, right? This is the 200 EMA, right? So this, of course, being what we call our big money moving average, right? This would be our BMT. And so we have the 200 moving average that clearly was defended. Over the past few weeks, though, we kept going from 200 back up, 200 to 100, 200 to 100. Now you can see we finally have broken free. And since we have our little brother, the S&P, already pushing up to its all-time highs, it's easy for me now to think, boy, might we make a big run for this? Might we make a big run up to that high? Now, here's a little bit of a clue. Let's take this move here. Take that move right there. And let's take our ruler tool, right? It's the Control F3. And let's go measure. Now, what I want you to see here is how long it took. How much time did it take to go from that low to new all-time highs? It took 30 days, 1 month. Now, if I project that up top here now, are you with me? Are you with me? Okay, so now I take the projection from the low up to the high, I drag it over, and here now is why I say it took 30 days to get from the low up to the high. What day was this? The 16th. So if it takes 30 days to go again, that means that once we get to, June 15th possibly, right? OPEX week of June, quad witching week, it would make all the sense in the world to be expecting those all-time highs to be tested once again. Now, as of right now, that's just some fun speculation here towards the middle of June. All right? I think, though, that we are probably going to try to take a big chunk out of this here over this week. At least it feels like that, right? Today felt pretty darn bullish. We'll have to wait and see what tomorrow brings, but that's the first thing that comes to mind here, right, is that we should be testing those all-time highs. If we are as bullish as the rest of these equity markets, yeah, we got some time, but you can definitely tell we're looking to get pushing higher here back to that 1200 again. Now let's figure out how we're going to make money on this for tomorrow. Now again, you might have thought this run up was just a coincidence, but what you can see here though, we ran right into major anchor chart resistance here at 1143.6. So just like we said on gold, I do not want to buy at a premium, right? I wouldn't want to buy a pair of blue jeans when they're double the price. I'd want to buy a pair of blue jeans when they're half the price, right? So I want to buy at a discount. Now, there's a couple spots on this chart I'm going to use here to be a buyer. First of all, I'm not buying right here. I want to buy on a pullback. And as we go lower, I'm going to think this old trend line is going to be our first opportunity here. So this old trend line here is probably going to be the first chance we get to be a buyer, at least the easy money. And I kind of speculated that by the time we get there, it would be around 1124 to 1122. Guys, unfortunately, I can't be that accurate as far as when this trend line will be tested. But if I had to guess, it'd be somewhere between 24 and 22, right? So once we get down to that area, that's when we'll be looking for the buy. So we got 24 to 22 area. I've got 16.1. So basically my levels here right now are 24 to 22, 16.1. I'm going to use this trend line obviously to buy as well. And then we have the 11.2, 03.5, and then I don't think we'll need this week, but 92.6 and 86.1. All right, guys? So as you look at this chart here, we're overbought, maybe not overbought, but we're at a premium price. So I'm going to stay patient and wait on the Russell for the Russell to pull back. And I got levels here again at 22 to 24, 16. I got 11.2, 3.5, right, so on and so forth. And then if and when we do get into that trade long, our targets overhead here now are easy. Targets are the levels above me, as you can see listed on the charts. All right? So bullish here on the Russell, but we're due for a pullback here before I'm going to be buying. And if we end up going lower tomorrow, it's probably going to be a very short-term move lower here, just for some profit taking, a little bit of a pullback, return back to its mean, and then start pushing higher. So we'll see what tomorrow brings, but right now looking bullish, and I'm looking to buy it after it pulls back here. All right? Moving forward here now. Had a bunch of questions that came in, guys, and I encourage you guys to email us here at jj@schooloftrade.com or post a comment for me on my blog, and we'll be sure to answer those questions for you. Had a lot of questions that came in about this long-term move on crude. Here's another one of those slower time frame anchor charts, and you can see I've zoomed out quite a bit here, and we've got a lot of reasons to believe this price could keep going here up to at least 106, 108, maybe 110, depending on how this week plays out here. Now, things are a little bit choppy out there in these markets right now because of all the kind of geopolitical things that are happening right now. So time projections are a little bit inconsistent, right? Because things are interrupting it right now. If we take the same measurement, all right, let's say we measure again. Let's measure now from the last low to the new high, right? Recent high. That's another month. All right, see it? 28 days. It took 28 days to go from this low to this high. Now, think about this low. Project 28 days up. And this low here is what? It's the second of the month. So 28 days up. That tells me now that we should be able now, and look at this. It actually lines up. Yep, it does. It lines up almost identical to that prior target at 106.56. So by the end of the month, 106.50 is definitely in the cards by the end of the month, right? Difficult to say if that time projection is going to be accurate, again, because there's so much stuff happening every day. So things can really change quickly. But as far as my target goes, 106.56, 108.83 is definitely a projected target. And you'll notice here, though, I would love to be a buyer down around this 101.36 to 101.61. That would be just a tasty buying opportunity here on the crude. All right, so that's the long term. All right, if we happen to pull back, which might happen, it might not. If we happen to pull back, though, we're looking to buy that 101.36. And again, from what it looks like right now, it looks like we have a projection up top here by end of the month to that 106.56 area. All right, give or take a few ticks here and there. That covers crude for the long term. Now we look at crude here for the short term. And this is how we can capitalize on it. So now that you know where we're headed, here's how we're going to capitalize on this black gold. Ever since, Wednesday evening, we had that big run up on Wednesday, and then we had this just Thursday, Friday, Monday was a holiday, Tuesday, slop and chop here. So it's very, very easy to see that even though we are long-term bullish, we are short-term range-bound, short-term sideways. That means tomorrow we have the exact same plan as we did today. If we see it come out range-bound tomorrow, I am not going to trade it like a trending market. I'm going to trade it like a range-bound market, buying the lows and selling the highs. The ideal scenario, though, will be for price to pull back so I can then get long here. I've been waiting for this for a week now. 103.10 to 102.76, 102.71 to 102.28, 102.29 to 102.01. Geez, JJ, is there anything here you won't buy? Right? I mean, I know it's a little bit ridiculous, but it's been a sloppy move up, right? It got a little bit sloppy up here, and so that's why we have so many levels to work with here. So bottom line is, I'm sideways right now. If I had to choose the direction I'd be trading in, it would be the long side. So as we go lower, I'm buying at support. As we go lower, I can buy this 103.54. And then we've got buying 103.10, buying 102.76, right? 102.71, 102.28, 102.29, and 102.01. Last call here for buyers would be at 101.68 to 101.32. All right? I think the most important thing about this crude right now is not to get too anxious to get this thing to break out again. Okay, we had a little glimmer of hope there last Tuesday, Wednesday with that big move up. But again, that's not typical as of right now, 2014 for crude. If you asked me this a year ago, I would have said, oh, heck yeah, absolutely, 200 ticks, average. But not happening right now. I've got targets overhead here. Now, I already showed you guys where my targets were, right? We already showed you that previous chart where we have our best targets. You can see I've got 104.60 and I got 106.51. So it's basically the same target up top here at 106. But I have this interim target at 104.60. So again, the ideal scenario is get me a pullback. I can get long here and take my money off at 104.60 and then try to hold on to a runner all the way up to that 106.51 if you've got the bullets left in the gun. So trading sideways but bullish on crude. We're at a premium price right now, and I need this price to pull back. Same thing, but the opposite direction on gold, right? Gold has moved lower, and I want gold to retrace. before I sell it. And then, of course, same thing on the Russell. Russell, as we moved higher, we're now at a premium. Same thing for the Russell as for crude. I want to see the pullback before I start getting aggressive, being a buyer long term. And please remember, folks, what I'm talking about is medium to long term analysis right now. If you would like to get short term analysis, if you want to get exact entries, exact exits, if you want to be with me tomorrow in my trade room, watching me use these materials, remember, all the levels I'm giving you right now have to have a shelf life so that it will still be good for you for tomorrow. All right? So if you want to get real-time updates tomorrow morning, come out and see me. We offer a free trial. I'll invite you to come out tomorrow afternoon, trade with us tomorrow afternoon. We have 3 levels of membership: beginner, intermediate, and advanced. And I would encourage you guys, share this newsletter with a friend, join our free trial, come out and see me tomorrow morning if you want the exact specific price levels that we're going to use out of these charts. And guys and gals, you guys have a great Tuesday evening. Want to thank you so much for being a part of the call tonight. Again, my name is Joseph James. My wife Megan and I, we created schooloftrade.com over 10 years ago. That's right. We were one of the only people on the internet back then teaching traders. If you ask me, we're still one of the only people on the internet who know what they're teaching with those traders, but I'll leave my opinion between you and I. Alrighty? Give me a call here in the office, send me an email, jump on Skype. We'll see you tomorrow morning in the trade room, and don't forget to join the newsletter mailing list and send this to a friend. That way they can earn and learn right along with you. Have a great evening, guys and gals. Hope you had a great weekend. It's time to get back to the action. We'll see you tomorrow morning. Adios, amigos. Bye-bye for now.